Yes, Manish, you please start.
Good morning, everyone. Uh, First of all, I would like to wishes to happy Holi and happy Ramjan to everyone. And now, today we are going to discuss about one particular book, and we will discuss about the one chapter of this particular book. The book name is Budget Sabka, Bachat Aapka. Reason is that the government of India has budget, and that budget is applicable to everyone, whether you are the salary employed, whether you are the businessman, whether you are the bankers, whether you are in any mode of economy. So whatever the way you are utilizing economy or you are residing in society, that budget applicable to you. That will you have to see whether you are the big industrialist, then different kind of the policies work for you. If you are the a small taxpayer, then different kind of the policies applicable on you. You are MSME business owner, then in this budget there are lots of the benefit government of India has provided to MSME. So that will depend. Reason is that key budget is given for the each and everyone. Now we have to see whether from budget we are getting some saving, we are getting some relaxation or not. So all I have written my book that is related to budget as well as income tax provision that is applicable to you. So in this book, I have tried to decoding budget 25, and all you are aware there is no tax up to 12 lakh rupees. In spite of that, lots of person is asking question. When there is no tax up to 12 lakh rupees, then why slab rate is starting from 4 lakh rupees? And suppose that I have short-term capital gain, that is the 50 to 60% person is um, earning money stock market. And if you have the short-term gain, then what will be the taxation, whether it will cover under 12 lakh rupees or not. Suppose that I don't have the salary income, but I have house property income. So my house property income is covered under 12 lakh rupees or not. Then there are various kind of the question that is faced by me. So what I did collected all information, all question of general public, and I have simplified in Word and collected in 80 pages book. So today we are going to discuss about that is the most burning issue, old tax regime or new tax regime. You are aware this is 31st March 2025 is going to end, and after 2025 31st March you have to file ITR. This ITR is for your salary income. This ITR will be for your house property income. This ITR will be your business income. This ITR will be for your capital gain income. And if you have the any other sources income, like in we have seen in case of the senior citizen and who is the retired, they have the most saving from bank account, whether from saving account, fixed deposit account, or you can say the interest components. So today we are going to discuss about what is the old tax system, what is the new tax system, and which is the more beneficial for the taxpayer. And every taxpayer is the confused. When they have to file return, they get assessment. They got comparison sheet. What is the tax under the old tax regime? What is the tax under the new tax regime? Reason is that in both tax regime, tax rate is the different, exemption limit is the different, and you get some exemption and deduction in the old tax regime, but that is not applicable for the new tax regime. In old tax regime, a standard deduction is just 50,000 rupees, but in case of the new tax regime, it is the 75,000. So there are various component, various issues where common person has the very much confused. So today we are going to discuss about the old tax versus new tax regime, and which will be the beneficial for the 31st March 2025, and for the next year, that is to come 31st March 2026. So we will discuss example by example for 2025 as well as the 2025, and we will see whether this both regime is applicable for all head of taxation or not. Like I have the disclose If you have the salary head income, if you have house property income, if you have business income, you have capital gain income as well as the income from other sources. So that we have to think where it is applicable. Old tax regime. Old tax regime where you got wider range of deduction and exemption. In short, I will say कि old tax regime one, that is the one regime that we are following from the last 10 years, 20 years, and 25 years, where every salary class is getting various kind of the exemption like HRA, ATC, ATD, ATTTA. If you have the self-occupied home, then you got the home interest, uh, leave travel concession. If you are paying the some kids education, then you are getting the children education allowances. You are traveling, then you got leave travel concession. So there are various kind of exemption that is applicable for salary employed. And if you are the business owner, or if you have the income other than salary, then still you are eligible for the ATC, ATD, ATTTA, and home loan interest. Only benefit for the salary implied is exemption of the HRA, exemption of the long-term capital, exemption for LTA, that is the leave travel concession, and its education allowances. Apart from that is the 80D, 80DDB, 80C, 80TTA, and I will explain each and everything in the later part. So that is applicable for all sources of income. Suppose that I have the 3 to 4 house property where I have let out, and my main earning is income from house property, and I'm receiving money. Okay, I'm receiving rental income and I'm paying the tax. So I'm eligible for ATC, I'm eligible for ATT, I'm eligible for ATTTA, I'm eligible for the, if I have the home loan, I'm eligible to get the interest benefit. If there is some medical dependent in my house, it can be my parent, it can be my spouse, it can be my sibling, it can be my kids, and I'm spending some expenditure on my relative, then again I am eligible under section 80DDBA for the critical illness, in case that is the 75,000 rupees or 1 lakh rupees, that will depend on situation of illness. So in old tax regime, that is coming from the last 10 to 20 years, and in this scheme you will get the various kind of the exemption. But in case of the new tax regime, there is no benefit. It means there is, you are not eligible to get the benefit of ATC, you are not able to get the benefit of the ATT, and you are not able to get the ATTTA. So just I will explain what is the HRA. When you are doing any job, when you are doing any job and you are residing anywhere, definitely you will reside somewhere to perform your duty, and you are paying some rent. This rent can be 10,000, this rent can be 20,000, this rent can be 25, 50, 1 lakh rupees per month. That will depend where you are residing, what is your salary income. Suppose that your salary income is 50,000 rupees in hand. So definitely your house rent HRA can be 10,000, 15,000, or maximum it can be 20,000. I will not accept you are earning 50,000 rupees and there is no other source of income, and you are paying the 50,000 rupees as a home loan, as a home rent. That is not possible. Okay, so it is calculation, or you can say it is the exemption. Okay, whatever you have the income, it can be income from salary, it can be income from business. The maximum you have to pay 20 to 25 or maximum 30% of total income as a house rent. Suppose that my salary is the 1 lakh rupees per month, then I'm eligible to pay around 30,000 rupees as a home rent. Okay, my, if my salary is only 50,000 rupees, then I'm eligible approx to pay 15,000, 17,000, 18,000. Maximum you can go for the 20,000 rupees. That is the maximum limit. Otherwise, what will happen? Your salary is only 50,000 rupees and you are paying 25, yeah, 30,000 rupees as a house rent, then it will create problem for you because you are not able to make some saving. Okay, so when you are paying rent, then there is the three criteria: how much HRA you are receiving, that is the one. Second thing, rent paid minus 10% of basic. And third is 50% if you are residing or you are paying rent in Delhi, Mumbai, Kolkata, Chennai. Otherwise, it is the 40%. So suppose that my salary is 1 lakh rupees. Suppose that my salary is 1 lakh rupees, or my basic is the 70,000, or I am getting 30,000 as a house rent, HRA. So my first criteria is how much I am getting house rent, that is the 70,000. Second thing, it's saying if I am in Delhi, then it is saying the 50% of basic. So what is my basic? My basic is 70,000 rupees. So 50, what will be the 50%? 35. So first is the house rent receiving 30,000. Second is the 50% of basic, it is the 35,000. And third one is saying rent paid minus 10% of basic. Suppose that I'm paying rent 40,000 rupees. My salary was the 1 lakh rupees, so I can pay the 40,000. So I'm paying the 40,000 rupees as a house rent. So 40,000 minus 10% of 70%, that is the 7,000. So this is the 40 minus 7 is called, it's become 33,000. So what is the minimum? 30,000, 35,000, 33,000. The minimum is the 30,000 rupees. Okay, that I am receiving as the HRA. It means whatever the amount I am receiving, that is the 100% exempt. There will be nothing in taxable in my hand. All HRA will be exempted. So that we have to calculate in all taxes scheme. 80C. 80C is the one deduction where you are paying some insurance. When you are paying education fee or tuition fee to your kids, when you are investing in PPF, when you are investing in insurance, when you are investing in NSC. Okay, so our ELSS, when you are paying or you are making investment, so you are eligible to get deduction of the 1,50,000 rupees. Suppose that you have invested only 90,000 rupees. You have invested 20,000 rupees in PPF. You have invested 20,000 in ELSS, and 50,000 is your kids' education. So in total, how much amount this became? It is around 90,000 rupees. And 80C is eligible up to 1,50,000 rupees. But your investment is just 90,000 rupees. So how much amount you are eligible? So your eligible amount is only 90,000 rupees. So 80C is saying 1,50,000 is the maximum, but how much amount you have invested, that you are eligible. Let's assume your kids' education is 20,000 rupees per month. Your kids' education is the 20,000 rupees per month. How much amount we are paying in a year? That is the 2,40,000. Kids' education is allowed under section 80C. But you have paid 2,40,000 rupees. But are you eligible for 2,40,000? No. Reason is that 80C restrict you only for 1,50,000 rupees. It means you have paid 240, but you are eligible only 150 rupees. In the reverse case, if you have paid 1,20,000 rupees, then are you eligible for 150? No. You will be eligible in that particular scenario 1,20,000 rupees. It means amount paid out 1,50,000, whichever is lower, that is the eligible for 80C. So that you are aware now. 80D. What is the 80D section? 80D section is the insurance premium. 80D section is the insurance premium, or in insurance premium, how much you have to pay, that you have to think. You have to take insurance for medical insurance. You have to take insurance for the medical that related to you, spouse, children, and parents. And that you can buy the insurance up to 50,000 rupees. That insurance premium you can buy up to 50,000 rupees. Suppose that you are saying my insurance premium is only 12,000 rupees per annum. Then how much deduction you are eligible? Only 12,000 rupees. But your insurance premium is more than 50,000, like 51,000, 60,000, 75,000, that you can pay because your family member is more, and your parent or spouse has some critical illness, then premium can be higher than 50,000 rupees. But what will be your eligibility? Your eligibility will be restricted to 50,000 rupees. It means whether you are paying the premium more than 50,000, but you are eligible only for the 50,000 rupees. There is the one more deduction, that is the called 80 TTA. Everyone is aware if we keep some money in saving account. We keep some money in saving account, and saving account is providing some interest. This interest can be 3.75% or 4%, and that interest is provided monthly basis, or that interest is provided on quarterly basis. So as per section 80 TTA, where income tax department is saying, if you have income from saving account, when you have income and that income is the interest portion and it is from saving account, then up to 10,000 rupees you are eligible. Suppose that Mr. Manish, myself, I am getting interest income. One interest income is the saving account is the 12,000 rupees, and I have made deposited in fixed deposit, and fixed deposit interest is around 20,000 rupees. The total interest component income is 12 plus 20. So my total interest is the 32,000. So whether I am eligible for the 32,000 or I am eligible for the only 10,000 or I am eligible for the 12,000. So I am eligible for only 10,000 rupees, because 10,000 is the maximum limit, and that is up to restricted to saving account. That is not applicable for the my fixed deposit account, fixed deposit uh, interest component. In the second example, suppose that my total interest component in saving account is the 6,000. My total interest component from saving account is the 6,000, and my fixed deposit amount is around 30,000 rupees. So in total, how much amount I am receiving? That is the 36,000 rupees. Okay. But I am eligible for 6,000 rupees deduction, or I am eligible for 10,000 deduction. So I am eligible only for the 6,000 rupees. Reason is that ki, reason is that ki my maximum limit is the 10,000 rupees, but that must be come from the saving account, not from the fixed deposit account. So I'm getting saving account. I'm getting the saving account amount, that is the 6,000. So I'm eligible only for the 6,000 rupees, not more than that amount. So that you have to understand, or that you have to consider what is the deduction. And another deduction that is eligible for the old tax system, that is the home loan interest. It is the well known in now house property is coming around 50 lakh rupees, 70 lakh rupees, 1 crore, 2 crore, 3 crore, 4 crore. So no one can buy home from upfront payment. Everyone around 90 to 95% person is getting getting home through loan. It means when I have to buy home, so I apply for the bank loan, and I'm getting the bank loan, and I'm repaying the loan. So almost 90% person is buying home through home loan. So in home loan, you have to pay interest, you have to pay EMI, you have to pay principal amount. The EMI cover your principal amount as well as your interest amount. It's okay. So interest component, that is the up to 2 lakh rupees per annum is eligible in old tax regime. Suppose that my EMI is around 40,000 rupees per month. The in a year, how much amount I have paid? That is approx 40 multiplied 12 is around 4,80,000 rupees. That is the 4,80,000 rupees. And let's assume in 480, interest component is 3 lakh rupees and principal component 1,80,000 rupees. Okay. So I'm talking about the home loan interest. So how much I had the home loan interest? That is the 3 lakh rupees. But how much eligible I'm for the self-occupied home? That is only 2 lakh rupees. It means I have paid interest component 3 lakh rupees, but I am eligible only for the 2 lakh rupees. So that you have to understand your total amount, will be maximum of the 2 lakh rupees. Suppose that you are paying only 1,30,000 rupees as the interest component. So you are eligible only for the 130, not for 2 lakh rupees. So that you have to understand, that you have to remember in your mind. Apart from 80C, 80D, 80 you are eligible for 80G. 80G is saying that when you make some donation to some government fund, that is the Prime Minister Drought Relief Fund, there is some Chief Minister Drought Relief Fund, there is some Government of India Fund, there is some National Defense Fund, National Children Fund, and various NGOs where you are making some donation, you are eligible to get some deduction. Okay. So suppose that you have made some donation. This donation can be 100 rupees, 1,000 rupees, 1 lakh rupees, 10 lakh rupees. That will depend how much amount we want to donate. And it is optional. It is not a compulsory. But when you have made donation and that institution is eligible for the eligible for 12A or 80G, so they will provide one receipt. On basis of that receipt, you can claim as a deduction. So that you have to understand. Apart from, in the earlier, I have told to you, there is some dependent in your family and they are suffering from some diseases. They are suffering from some diseases, then you are eligible to claim under 80DDB, that is called amount spent on relative. For critical illness, you are eligible for 1 lakh or 1,25,000. So that will depend which illness is your relative is facing. Okay. And in last, in old tax regime, your the salary implied, so you are able to get the benefit of the standard deduction of 50,000 rupees. In case of the new tax regime, you are not eligible. What I have told, 80C, 80D, 80TTA, home loan interest, HRA, you are not eligible to get in case of the new tax regime. New tax regime is introduced due to lower tax rate, because in the old tax regime, uh, after 10 lakh rupees, it is they are charging 30%. Okay, but in case of the new tax regime, 30% taxation after 15 lakh rupees. And from the next year, that is the year ending 2024, 2026, 30% will be chargeable above 24 lakh rupees. So that you have to understand, till new tax regime is introduced due to the lower tax rate and a standard deduction in or new tax regime, it is around 75,000, whereas 50,000 in the old tax regime. So in new tax regime, they are providing lots of the other benefits like lower tax regime and lower tax rate. So they have reduced all kind of the deduction and exemption. In new tax regime, suppose that I have house and I'm paying rent as a, so I'm not eligible as a HRA. If I have the house where I'm paying EMI, okay, so in EMI, I have principal component as well as the interest component. So I'm not able to get interest component benefit, that is the under section 24B. So I'm not able to eligible anything. So that is the difference between the old tax regime and new tax regime. Now I'm going to describe one example where you will identify where this amount is eligible or this amount is taxable or not. First thing is that I have taken the one example of the Mr. Tushar, that is he has the income of the 12 lakh 75,000, and he has the investment in the life insurance 1,50,000, and he has the medical insurance of the 50,000. He has the home loan, and home loan interest was 2,50,000. So what will be the tax liability for 31st March 2025, जो अभी खत्म होने वाला है, in the both scenario, in old tax regime as well as the new tax regime. First, in the old tax regime, salary will be 12,15,000 less a standard deduction 50,000, and you have the home loan. So you are still eligible for the interest component of the home loan. So how much amount you have paid as the home loan? That is the 2,50,000. But you are eligible only for the 2 lakh rupees. And you have paid for the life insurance, you have paid for the medical insurance. So you are again eligible for each and everything. So what will be your net taxable income? That your net taxable income 12 lakh 75,000 minus 50,000 minus 2 lakhs minus 150 minus 50,000. So your taxable income will be 8 lakh 25,000. And taxation on the 8 lakh 25,000, it comes around 77,500. So that is the calculation under old tax regime. When we will consider in the new tax regime, so what will be the 725 minus 75,000? I'm not eligible for the home loan. I'm not eligible for the ATC. I'm not eligible for the ATD. So my net salary income will be 12 lakh rupees. And how much tax I will have? So my taxation will be around 80,000 rupees. So in this particular scenario, I'm I'm beneficial to if I have chosen old tax regime. So there is the one break-even point in the old tax regime versus new tax regime. That break-even point is around 3 lakh 50,000 rupees. When I'm paying rent or I'm getting HRA benefit. When uh, I'm making investment under section 80C, 80D, and in total amount is around 3 lakh 50,000, 3 lakh 50,000 or more, then all tax regime in the beneficial. In this particular scenario, in this particular example, my home loan is the 2 lakh rupees, ATC is the 150, and medical insurance is the 50,000. But in total deduction is 4 lakh rupees. Total deduction is the 4 lakh rupees. So it is the showing ki old tax regime is the beneficial. If my total deduction is the 3 lakh rupees or less than 3 lakh rupees, then definitely my old tax regime will be benefited. In the next example, you will see कि in the next year, that is the 31st March 2026. So I have taken the same example of the 12 lakh 75,000 rupees income, investment in insurance, that is the 1 lakh 50,000, investment in the medical, but everything I have taken the same except time. The time I have the taken for the 31st March 2026. When you will calculate in new tax regime, the 12 lakh 75,000 minus 75,000, then total income will be 12 lakh rupees, and there is no taxation up to 12 lakh rupees. It means your tax will be zero. But in case of the old, as you will calculate each and everything, as in the last year, because there is no tax, there is no change in the old tax slab rate. So whatever the amount tax on the 8 lakh 25,000 was coming in the previous year, that 31st March 2075,500, again that amount will come. It means in next year, even you have the deduction under old tax regime, but still you have to pay the taxes. From the next year, your break-even point will be for the choosing new tax regime as well as the old tax regime will be around 7 lakhs 50,000. But we have seen in this particular case, total amount, ATC, house loan or etc., all those things, that is approximately 4 lakh rupees. Okay, so that not match of the 7 lakh 50,000. So once you have the deduction of the 7 lakh 50,000 rupees, then you are eligible, then you are able to opt old tax regime or you are able to save some money. But otherwise, new tax regime will be applicable. One more thing. New tax regime is applicable for your salary income, your house property income, your business income, your other source income, except capital gain when you are earning some short-term or long-term capital gain from anywhere, like you have sold your real estate, you have sold equity share, you have sold gold, you have sold mutual fund. So because capital gain is taxed at a specific rate, like 20%, 12%, or 20%, whatever the rate it is coming. Okay, so that particular rate is coming, so that is not applicable on capital gain. And once you are earning some lottery income, like in the today's scenario, all person is involved in the online gaming. It can be Ludo, it can be cricket, it can be anything. It can be any kind of the apps. So you are earning any lottery income or online gaming income. So that is the tax at the rate of the 30%. So new tax regime concept of the 12 lakh rupees or 7 lakh rupees, that is not eligible for the capital gain and the house property. So in that case, what's happened? Mostly person is asking कि I have the short-term capital gain. My total income is less than 10 lakh, 12 lakh rupees for the next year, so whether I have to pay the taxes or not. So this is my example where you will find out. Mr. Manoj has the income of the 10 lakh 75,000 from salary head. Mr. Girja has the income of the 14 lakh rupees, and you will find out ki what is the yeah. So in that particular scenario, you will find out ki it is the taxable ki when your income is exceeding 12 lakh rupees, and if Mr. Manoj, if he has some short-term income tax, so in spite of that, his total income is not exceeding 12 lakh rupees. If he has the short-term capital gain of the 1 lakh rupees, 50,000 rupees, still he has to pay the taxes. Okay. So that is the calculation, and that is the one question they are asking some person. If when there is no tax up to 12 lakh rupees, so why tax is slab rate is starting from 4 lakh rupees? The reason is that when your income will exceed 12 lakh rupees, so your total tax liability will be calculated from 4 lakh rupees, not from uh, 12 lakh rupees. In my book, you will find what is the concept of the total income, that is the salary head income, what is the house property income, what is the business gain income, what is the capital gain, and what is the income from other source. And you will find out, okay, I have written the some specific like income from house property. You own house and earning as the rental income. So the income is taxed under the house property house property head. So this kind of the information and definition you will find in my book. And in my book, again, you will find the what is the assessment year, what is the tax year, what is the previous year. So every person is confused because same particular period of the 12 month is considered sometime assessment year, sometime previous year. How you have to calculate taxation on the self-occupied home or rental home. So that I have given the example with illustration and concept, okay, where you can get the claim of the standard deduction, where you will get the deduction of the house rent, where you will get the benefit of rent, repair and maintenance. So all detail I have the shared. Lots of person is confused. Okay, what form and what is the due date? Like I have to file the return on the 31st July, 31st October, or 31st December. So each and everything I have explained, and in the next topic, in the next session, I will explain about the income tax form and income tax due date. That will help to you how you have to choose and which date you have to file your income tax return, so you can save your tax liability, and income tax department will not charge any interest and penalty from you. And in this book, again, I have also shared something like what is your PAN. Suppose that anyone has provided this particular PAN, AEYPM 5403H. So how you will identify this particular PAN related to individual, male, female, company, private limited company, partnership form, LLP. So that kind of the information I have tried to compile in my book, income tax form. And now, if you have any question, most welcome. That you can ask question about my book, that you question related to income tax or business and finances. You are most welcome. And I would like to request Samara ji, you can